Hello, welcome. My name is Siwin Yi from the Yi Real Estate Network. Welcome to another video episode. And today I'm going to talk about what's going on with the national builders. Now, the objective of this video is to go over what's going on with the shift with the national builders with respect to how are they constructing single-family homes, how they're shifting from the larger market into smaller markets. But at the end of the video, I'm going to share my personal opinion based on 30 years of investing in real estate for myself and my real estate investors. So we take our investors throughout the country over the past 20 years to buy in affordable markets, the markets that have strong job growth and population growth, very affordable, where investors can cash flow at 20 to 25% down payment. We help investors from all over the country to buy turnkey, remote, passive, low cost, high cash flow properties, and mainly in the South and Southwest, and South and Southeast, I'm sorry. And we have over the years, we have established some great relationships with local builders in a specific market, which cater to our investors. So, all right. So this is a really, really good news for not only for investors, for mom and pop turnkey investors, but also for any people that want to buy primary homes in these sub-markets, in these affordable markets, right? So with that said, I just quoting right now in today's video, an article by the National Association of Home Builders, right? And the article which just came out this past week, shift in single-family home building towards smaller markets. So here's a highlight of this. My takeaway is, again, there's a shift in home building activity over the past 30 months, notably slowing in large metro urban areas as a result of the initial COVID migration effects. And then, of course, followed by the declines in housing affordability in high cost and highly regulated markets as interest rates increased. And more single family and multi-family construction occurring in lower density markets, said NAHB chief economist Robert Dietz. And he goes on to say that looking in the past 12 months, single-family production has slowed in regional submarkets, both large and small, due to ongoing building material production bottlenecks, construction labor shortages, and the Federal Reserve's tightening of the monetary policy. The index shows that the market share for single-family homes in large metro, core, and inner suburbs has fallen from 44% to 41% from the third quarter of 2019, pre-COVID, to the second quarter of 2022. In contrast, single-family home building in outer suburbs in large and medium-sized metros has expanded from 17.4% to 19% during the same period. So here's my takeaway. All right, my takeaway from this article is that I see a shift of national builders. You know who they are: the D.R. Horton of the world, the Lennar, KB Homes throughout the country. They are shifting into constructing in affordable markets where the cost of construction is lower, where the profit margin is higher. So specifically, they're going to the affordable markets, mainly in the South and Southeast. We're talking about Texas, Florida, Georgia, North and South Carolina, and Alabama, a few other places where they could use the economy of scale to build more new construction homes for owner-occupied buyers as well as for investors. Actually, most national builders, they do not specifically build for real estate investors as rental homes. They build primarily for owner-occupied primary home buyers, first-time home buyers, and what have you. But so so I see this shift, which is will continue. So we're talking South and Southeast affordable markets where, the cost, where the medium home prices, depending on what market, Florida, for example, is anywhere from $200 to $400,000 price range. In Texas, depending on what markets, which is around $300,000 or to around 500. That's the typical price point for entry level new construction homes. So and now what I'm seeing is that many of the home construction, many of the builders in the country, especially in affordable markets. I'm not going to talk about California or the high cost markets in Chicago or New York or Miami or anywhere in California for that matter, because those homes are it's beyond $1 million. But needless to say, what we're seeing is that there are excess inventory of completed new homes in several markets. And what we're seeing, because of the decreased demand, because of the decreases in demand due to high interest rate and the home affordability is at a 40-year low, the national builders in many markets have found themselves with a glut of completed homes that are sitting in the market because the builders are closing their books for the year, right? They are closing their financial statements, and they need to get rid of the inventory, and they have a glut of completed new homes that need to get off their books. All right, and so that's what's happening, and so they are offering so many incentives, right? Before, during the pandemic boom, between March 2020 and up until a few months ago, yeah, the nation's builders have such a big advantage. They are using lottery system. They are increasing their prices. They offer no incentive, and a lot of home buyers, they are lining up overnight, like 2 or 3 blocks long to get into a contract with some of these builders. So the builders got greedy back then. They were raising their prices. They are accepting deposits of $50,000 to $100,000 deposit to reserve a home. In the past. Nowadays it's completely different. Now there are a lot less buyers because it's hard to get into a home. There's a lot of builders cancellation, as we all know. The increase in interest rate has caused many of the buyers that reserved the contract a year and a half ago, they no longer qualify to buy this new home, so they have to cancel their contracts, and oftentimes they are even unable to get the deposits back, 50 grand, 100 grand. So now is the switch has flipped. Now the buyer have more negotiation power. So the builders are in a desperate situation. They are offering incentive. They are offering closing costs to be paid by the seller, by the builder. The builders lenders are offering a rate buy down, or to whatever 2 or 3 points rate buy down, so you can lower to investors can get a lower interest rate, so they can cash flow on their properties. And also builders are decreasing some of their prices 5 to 10%, or sometimes even more. So so the builders are in distress. So at the end of the day, whether you as a home buyer, primary home buyer, or your first time buyer for that matter, if you are a veteran that have a 0% down VA loan capacity, or if you're FHA buyer, a home buyer with a 3.5% down payment, finally you're able to compete in this marketplace because there are less competition and the builders are offering so much incentives. As an investor, you should target as a mom and pop cash flow risk investors. If you want to buy new construction homes in affordable markets where you can cash flow at 25% down payment, even with a 6.5% interest rate without any kind of rate buy down. This is an opportunity. This is a small window of opportunity to take advantage of this opportunity to buy at a much lower cost, multiple incentives. It all depends on what market, of course. Because our network over the years have great relationship in many markets, but I'm going to target 2 markets right now that you can buy a home, for example, in Central Texas for like less than slightly around $300,000. The new homes from these great builders, they have, again, I mean, for me to come back to you right now and let you articulate to you that they are still $300,000 single family home in a Central Texas market, for example, outside Austin, like, you know, in the suburb of Austin, in north and to the south, adding San Antonio, for only, you know, around, you know, anywhere from $350,000 to $300,000 new construction, completed homes. You can buy with 25% down payment, and the rent is like $2,300 on $350K, and the $300,000 homes. Once you close escrow on these new homes, you can rent it out for like $1,900 to $2,000. So the numbers really make sense, especially when you take advantage of the buy down in the points to lower your interest rate to maybe in mid 5%, so you can cash flow, right? And in Florida, same thing. In Florida, we have a lot of incentives. The builders are reaching out to buyers. They are reaching out to cash flow mom and pop real estate investors. In Florida, depending on where it is, like especially in Central Florida and Southwest Florida, the builders have reduced their price 5 to 10%. They have offering same kind of incentive, rate buy down, closing cost reimbursement, as long as you use their builders. So this is such an amazing opportunity. So since we have a relationship with local builders in these 2 markets, this is a prime opportunity. Whether you are a primary home buyer or whether you are out-of-state turnkey investors, to take advantage of this small window from the builders. All right, so that's the takeaway. Right, so that's all I have to say. If you receive value from this video, please click the like button and also subscribe to my channel, because I have weekly videos about, you know, relevant real-time real estate news and also real estate investment news as well. And also you can comment on the bottom to see what you think of this presentation, and I will most likely going to respond to your comments at the bottom. And finally, you can subscribe to my website at the bottom. You become a part of our free real estate investment community of investors. You provide your email, you become our free member. So on an email newsletter, you will continue to receive weekly, very relevant, exciting real estate investing education and real estate opportunities to purchase turnkey cash flow properties with property management, the whole one-stop shop. You can do it passively, remotely, from wherever you're located in the country or in the world for that matter, and you can still do it successfully. All right, thank you so much for watching and listening. I'll see you on the next video. My name is Si Wen Yi from the Real Estate Network. Have a nice day. Bye-bye.